This $3.5 trillion giant just sent a massive warning to the world. The fifth largest economy in the world is actually drastically cutting interest rates at an unprecedented rate. They've actually used the words jumbo rate cut with this. And the reasons that you see might be shocking because everybody is always talking about the effects of tariffs when it comes to just the United States and China, but the layover effects that are occurring all over the world are something that people need to start paying attention to because the global economy is now slowing down. And this move by India is just the start of all of it. India slashes interest rates, making it the biggest interest rate cut that we've seen so far this year. And it's rolling out a, quote, aggressive monetary easing, revive consumption and investments in the world in the fifth largest economy. But the payoff hinges on whether banks will ramp up credit and companies want to take on more debt. So, will people be borrowing to get more rupees is essentially the question. The policy shift is in line with the government's broader push to support micro, small, and medium enterprises, critical to create jobs. And this sector contributes about 29% of India's GDP, which, as I stated in the intro, is the fifth largest economy in the world at about $3.56 trillion, just behind Japan. But the interesting part of India is that India is very closely tied to China. It's the second biggest economy or third largest economy in Asia, behind China and Japan. But they're very, very close, and they've got the world's largest population. So the RBI cut interest rates. How will it impact personal loan interest rates, is everybody's essentially asking here, because like we said at the beginning, are people actually going to be borrowing to, increase their spending habits here? Time will tell, but there seems to be a lot of question marks around this. The repo rate cut by 50 basis points in June, an overall 1% since February, is translated into lower interest rates. And everybody was kind of surprised on this. And the reasonings might shock you. They've lowered interest rates deeper than expected, 0.5%, the third cut in a row amid falling inflation, allegedly, and lower growth in Asia's third largest economy. So that's the big takeaway, I think, here, is that everybody's looking at this and saying, well, we've got a ton of a ton of slowed growth here in Asia. And it's also increased the amount of liquidity or supply of money available in the system. It now stands at about 5.5%, which is the lowest it's been in 3 years. The rationale for the cut said the growth is lower than our aspirations, and the bank felt it was imperative to stimulate domestic consumption and investment. Now, the interesting part of that is it's not just India that is sharing these effects. The global economy is expected to, quote, continue growing, but at a slower pace than previous years, with growth forecasts keep being revised, and they keep being revised downward. It's set for the weakest run since 2008. Look, that is not me saying that. That is literally the World Bank Group saying that. Heightened trade tensions and policy uncertainties are expected to drive global growth down this year to its slowest pace since 2008, outside of global recessions. According to the World Bank, the turmoil has resulted in growth forecasts being cut by nearly 70% of all economies across regions and income group. It's slowed to 2.3% in 2025, nearly 0.5% lower than the rate as expected and at the start of the year. But yet a global recession is not expected. That's where I think is interesting, is they're saying, hey, you know what? We're going to cut, and all of these projections that we're making are significantly lower than everywhere else. But we think from the bottom of our heart that this is just perfectly fine. This is not going anywhere. Don't worry about it. Not a recession. No need to sound the alarms. Come on, let's be honest here. The inflation headlines are cooling and easing, but the food prices slide and the central bank surprised markets with a jumbo rate cut. The move, spurred by easing inflation, underscores policymakers' shift more aggressive monetary easing to bolster economic growth. Now, India's consumer inflation eased to 2.82% in May, and the country's Ministry of Statistics and Program Implementation reported Thursday. So the year-over-year headline was an estimated 3-point increase. But everywhere, Asia, the whole world, everywhere is lowering growth forecasts. And the funny thing is they're all citing tariffs. Like, hey, tariffs are the root of all evil. This is why, we're seeing growth potentially come down. But if tariffs are supposed to fight inflation and we have the global reserve currency currently, why is that? It doesn't make any sense at all for this, right? So I think that, Asia's growth forecasting going down. Everybody's always been focusing on China. Of course, they're the second biggest economy in the world. But right behind it, we've got Japan at 4 and India at 5. So 3 of the top 5 economies are in the continent of Asia. And this is just drastically falling down. Like all 3 of these economies combined are not quite as big as the US, of course, which is crazy to say. 3 of the top 5 GDPs in the world, we've got 17 trillion plus 4 trillion. So call it 18 plus 4. We've got 22 trillion plus 3.5, 25.5 trillion. And that's still less than the overall United States GDP. But the interesting aspect is that even with that, right? I mean, even if all of these countries in Asia just combined, they're still lowering their GDP forecast for the year 2025. And it keeps happening. It's coupled with indirect effects via China, with reduced growth for most of the economies in the region. Economies heavily reliant on external demand are expected to see a significant decline in export growth. And, we're seeing these moves now, kind of move back and forth. We're seeing a lot of differences within the projections. Is the Fed actually going to cut interest rates? Like I said, we saw the jumbo interest rate cut from China, or from India, excuse me. We saw the talks of a jumbo interest rate cut from Australia. But the United States and Jay Powell are holding very, very strong here. They've actually now have a 2.9% chance of easing. Literally yesterday, I showed you guys this yesterday afternoon, and there was a 0.1% chance that they would raise interest rates. But now, after this news and the potential of what all is happening globally, we're seeing that now go to about a 3% chance we actually cut. Now, obviously, this is very low. This is coming in 1 week. So these projections are probably a little bit more accurate than when it's 45 days out. But why would we see an interest rate cut when we see the strength of the dollar just crashing? Like, this is, since I've been doing this, I've literally, the 2 months that I've started doing this, the start of the 2 months literally started in May 13th, or no, April 13th, excuse me. We've never seen the Dixie below 98. Now we do, 97.92. So the strength of the dollar is waning and really falling down. So why would Jerome Powell, seeing this, the strength of the dollar go down, want to cut interest rates? It doesn't seem to make sense. The liquidity around the globe is increasing. So if the liquidity is increasing, I feel like we need to tighten, because like with the strength of the dollar is not going where it needs to. Trump has also come out and said that, hey, we need to see a jumbo rate cut by a full percent. So not 25 basis points or, 50 basis points, a full percent, a full point. I don't think that's going to happen. And obviously, the CME group doesn't think so either. But with the dollar crashing and burning, we're seeing people start to flock towards assets a little bit more. The S&P 500 starting off the day pretty solidly, up 0.3%. But this is not exactly where everything is just yet, right? I mean, we're going to continue to see that skyrocket in flight as the dollar starts to wane, as people try to flock and find other assets to run to. And when we start seeing headlines like this around the globe, where, the US is looking at, hey, the dollar, we're looking at all of these different things, we're looking at all of the other fiat currencies around the globe really waning, we're going to start to see more and more people start to flock towards assets. It's going to be, in my opinion, an asset bubble that we're essentially going to see here very quickly. So with that, right, make sure you guys are smoking the like Cheech and Chong and hitting that subscribe button. I'm bringing these to you every single day. So be sure to join on this chat so I could get some feedback from you guys, how you're liking the content and all of that. But thank you guys all for tuning in on this great update on what's going on globally. As I said, smoke the like, and I'll catch you guys all at the next one.